Good afternoon. Today is Thursday, June the 16th, 2016. Today happens to be my sister's birthday, as I said on my closing statements on my video yesterday. If she ever listened to this video, she will find out that I was thinking about her. But that will never happen. What you're looking at over here is a screen on the pre-market. So yesterday I started doing my videos at the end of the market rather than staying with my rant throughout the entire market. I've been on it, and I will offer you a few insights into what happened, how the market opened, what I think about what happened, and so on. So this is how the market closed. This is the pre-market, and the market opened to a dollar drop, $1.02, with just shy of 3 million in volumes. So what we had is a continuation of what started after the Federal Reserve's announcement yesterday. You know, I've been thinking a lot about this, and I finally put together the reason behind me not treating the continuation, which I told you, if you've been following along, I said before, okay, the 60 minute is going to pull back against that daily, and then we're going to have a continuation, and that's the move that we are interested in. The problem is that the Federal Reserve took a shit in the water yesterday, basically, at 2 o'clock, and it changed my ability to trust the continuation. Because right at 2 o'clock, this is what happened. And my fear, since the market is so manipulated by these assholes, is that they're going to make it surge out of control and they wreck my continuation, which really should play out. And that is the main reason behind me hesitating on this pattern. I showed you yesterday how the pattern over here, the topping pattern that we have in here, is a little narrow for the 15 and a little wide for the 5. This is where you can find medium ground and say, let me bring in the 10-minute chart just to see. And if you do that, you will find a very nicely defined 10-minute chart. If we ignore the Federal Reserve announcement yesterday, then I would have brought myself to invest at the very least on the 208.50 puts, and I showed you yesterday how much those made. Here's the Federal Reserve announcement around 2, and if you had entered a position somewhere in this area or even here, which would have been right around here, you would have made, just before the end of the market, 78% return. And you could have said, I'm done with this, or trust the continuation as it already started, stay overnight, and take a look at what happened. I already showed you the pre-market at $1.02 on the open, so here's the opening. There's the drop. Take a look at the 60 on the continuation. The 15 drops, the 5-minute drops. The 1 minute had already created a little bit of a technical bottom before the close, right? And so that creates a little pattern over there. So that's a little upside pressure that sustains the price for a little bit. But on the next 5-minute interval, take a look at that 5, and even the 15 continues to move down, and the 60. Down we go. There's a little bit of support there. And by 9:40, if you had kept your position, this is what you would have made. This is the 78 that we saw, and made it to 292. I failed. Let me do this. 137%. Now, at this particular point, do you have to get out? The momentum is extreme. The continuation is full-blown going. So take a look at the magnitude and poise of the drop on the 15, the 5. Are we forming an upside divergence on the hourly? Absolutely. But we don't have enough to turn this thing, not on that 15 and not on that 5. No way. So you let them for 1 minute, pull itself back a little bit. This thing took a picture at 9:49. What the freak? It's 9:50 indeed. This clock was falling behind. Sometimes I notice that it does that. So take a look at the one pulling back, but we are reaching new lows. And over here, 9:45, you are already at 186%. And all of these are from 123 after the Federal Reserve's announcement. That's what that means there. So here's 9:55. We come up to the 10 o'clock. Take a look at the plot on the hourly. The momentum is extreme. Take a look at how the 15 on the 15-minute interval, boom. Then we go to the top of the hour, 60, boom. And the 5-minute continues and continues and continues to move down. We are pulling back on the 1 minute. Here's the context, which, by the way, let me show you this. Here's the close of market yesterday on the 60-minute context, and here's the opening. Take a look at the daily. The daily dropped from, technically, from 67 to 41, right? And take a look at the weekly, for crying out loud. And so the momentum on this daily is extreme. The context is we are in full-blown, I don't want to say collapse, but definitely it's really the monthly chart coming into effect. The weekly is losing its ability to continue driving the price. We have this huge pattern on top of it, and the daily got activated right around here. So this is the first pullback, and there's your continuation. Now, let's move on to the next 5-minute interval here. We're in full-blown pullback on the 1. The 5-minute can soon technically bottom, and that would be the moment of our exit if we had stayed on the drop over here on the 208.50s. Now think about this. You enter the 208.50s, you are at 207.50, you are at 206.50. That's $2 in the money. At 206, you are $2.50 in the money and beyond. Take a look at this. The 1 minute creates a pattern there, and that right there is, at least for me, an exit pattern. I have an hourly divergence. I have a 15-minute divergence. Do I have momentum? Yes. Can this thing sustain? Questionable. But where are you at on your position at this point? By 10:02, you are at 213%. Yeah, it makes it to $4 to 225%. Do you need that? The answer is no. Take a look at what happens after that. We established a technical bottom on the 5. We still have a little momentum on the 15 and hourly. At the 15-minute interval, take a look at our 15 continuing. So the price comes down. There is now another divergence on the 1 minute. Should, if anything, that right there would be your exit at 10:25. 10:37 gives you this. We can go further over here. That is your very bottom. That's 10:40. So 10:37 is what I showed you. That's the tippy top, and that, I mean, that's it. I would have exited way before that, like I showed you. Here's 11 o'clock. The hourly still goes down, but it is in divergence territory. Now we're full on building a pattern on the 5. Now over here, what's interesting? Take a look at this. Since you have that hourly already in divergence territory, a couple of things can happen on the technical bottoming on the 5. I have said this before. You either have a full-blown retest or you don't. You have a tiny little pullback, which is right there. That's it. That one right here. If anything, that should be your entry to the upside. If you were to trade this, what I said to myself, because I saw it, I'm like, I'm not going to trade against the trend. The trend of the daily is to the downside. So the price does this pullback. You can time it with the erosion of the 1 there. Take a look at the little pullback over there, continuation, that gets tired. So it turns back up, and then you have your full-blown upside. You could trade the 206.50s and just don't get crazy on the upside. Take a look at the 5-minute, getting tired. You move the price already at $1. The 5-minute tops out. It's 2 o'clock. Over here, I was seeing this. I was in the middle of doing a water change on one of my fish tanks, and I saw the 1, and I said the price is going to pop back up, and it did. Then that creates a pattern on the 5, and that appeases the 15, and this is where the market ends. Let's do this. The 206.50s to the upside, and you exit on the pattern on the 5 against that 15. That's it. If anything. Now, let's again establish the possible entry on the 206.50s. We established the technical bottom on the 5. The 15 is diverging. The hourly is diverging. what is the context? The context is that the continuation already played out on the daily trend, and we're hitting the bottom of the channel with support. The lower time frames are no longer feeding downside. A regression at this point, which would be introduction of weakness and the play out, the fulfilling of this upside divergence on the 60 is really plausible. This is where it's interesting, this technique where you identify the bottom of the 5. The bottom of the 5 really tells you this is the beginning of the change in trend. One of two things can happen. We have a retest or we don't. If we don't, that means that this thing pulls back on trend and it doesn't retest. But if it retests, it's just going to make for a beautiful divergence. The worst that can happen is that you go negative on your trade for a little bit. But this would have been the entry right around here at 10:45 on the 206.50 calls. Right here, 10:45, the 5-minute had technically bottom on a 60-minute upside divergence context. That's the context. And so up we go. The 5-minute goes up, right? We have a little bit of a regression right here. Let's see the markers that I did over here. By 11:30, you were at just shy of 90%. Over here, there's a regression. Then, yeah, 11:30, this thing, holy smokes, just explodes. Take a look at yeah, another thing is that I'm looking at this thing, but I'm not looking at the 15. The 15 is bottoming. It turned. The 15 turned on its own interval. This thing explodes, and by 11:30, the 15 is frankly going up. Take a look at the price exploding. That's 11:30, and at that time, you have 89%. Then you have this regression. Now take a look at how the options actually bottom, creating a perfect upside divergence, but the price did not. Take a look at this. There's a regression. It doesn't quite come all the way down here. You see, down here, those options were here, right? But the price of the stock never made it all the way down there. Why did the options do it? Because it's time premium erosion. It's Thursday. They don't hold that much value on price regressions. This regression, if you hesitated entering here, this regression gives you the perfect bottoming on the options. Heck, you can enter at 35 cents. Take a look at this, below 38, right? So from what happens from here, the price just explodes. Take a look at that. Take a look at the hourly, for Christ's sakes. The hourly is now turning on its own divergence. Now, let's not overstay our welcome, because we are still pulling against the trend of the daily. You got to pay attention to your channel regressions and who's holding the trend. The trend is being held by the daily. Now take a look at this. We regress over here, and now we introduce a little weakness to the 5. But we have a 15 with a lot of poise and a 60 that just turned. So that empowers this thing a little further. This stopping on the 1-minute chart around 12.50, and I'm hitting sort of the channel regression. I would evaluate where I'm at. I'm at 226% at 12:45. See, that's why I'm questioning this thing here. If I had decided to exit my position there, I would have made 200 and change percent. Then let's see how this thing plays out. Take a look at the 1 minute. Introduces weakness to the 5. But take a look at that 15. The 15 and hourly are really powerful. The 1 minute pulls back. And this is where I was doing the water change, and I said, I think it's going to pop back up. Take a look at the 1 minute. It's long against the uptrend. It pulls back the 5. Then you have the pop. Boom. This, at around 2 o'clock, if anything, is another opportunity. See? And then, boom, this thing explodes from 73 to 146. That's another 100% right there. But if you had held a position, you're now at 284% by 219, because the price explodes 215, 220, 219, boom, 5-minute pattern. this could arguably be the moment of exit right there, if anything, right here at 284%. Then what happens? The 5-minute gets going there, it pulls back. We'll take a look at that 60 for price sakes, and the price continues on the upside. While the 5-minute continues to want to stop the price, and that's how the price begrudgingly continues the upside. Now, let's not forget the context. The context is that we're pulling back on an established daily that is still seeing downside. Now, let's take a look at the long term over here. The long term, unfortunately, we don't have. The only thing that has the long term still straight is the yearly chart, but this is compromised. This is a negative divergence. This lost its ability to continue driving the price because it's broken. This is a downside pressure pattern that gives you this daily over here. You could say that this is a pullback on the trend, but we just don't have anything to feed more upside. This thing is just throwing a tantrum. Let me call the 2 and 4 for good measure. Shoot, I don't know. I don't see how this thing can just go up without the support other than this hourly. But that would have been the exit, either at 226 or 284. I would have been very comfortable here, and if anything, this 100% over here would have been very interesting. Those pullbacks on trend are amazing. Amazing. The trend was already established, and then you have the continuation. Now, before I capitulate this video, on the understanding over here, erasing the Federal Reserve noise that really impaired my ability to trade this thing, we did an exercise on the 208.50s. And the 208.50s were, you know, $1. This is where Dell tells you, because you know that there's going to be a move, go hunting for cheap options. Not because they're cheap, but because you have the certainty of a price move, of a continuation. So the 208.50s are above 23 or whatever, right? Above 23, above 20. What about the 207s? These are not even 10-cent options yet, but the 207 puts right around this moment, obvious continuation of the daily trend, 51 cents. On opening, you're at 233% versus the 208.50s that on opening were at 137. So 137 to 233%. Now take a look at the 206 puts. They were 31 cents. On opening, they go to 251. We can compare the 207s. And then 10 o'clock, 10:04, 480%, from 400 to 480%. Amazing. But these are not 10 cents. Let's go take a look at the 205s. Here's the 205s. They are not 10 cents. They were 18. On opening, 266%. By 10 o'clock, 580%. Take a look at the comparison from the 208.50 puts on opening at you know what? I didn't even do the opening. Yeah, the opening over here is right here. I was going to say that's the opening. That's not nuts. 137 to 266, twice as much. And then on the top over here, that's 213 versus 583%. And again, these are not 10 cents yet. Before I go to the next ones, the continuation over here, now we are on something that's way out of the money. We just saw the 205s, the price never even made it there, yet those options moved enormously because they are affected by the dance floor. Let's take a look at the 204s. Take a look at this. These guys were 13 cents. On opening, they go to 223. But over here, we're starting to see something interesting because we went from 266 on the 205s to 251 on the 206s. We're losing ground over here at 223 on opening. Now, take a look at the 204s, make 538 to the top over there versus 583. The reason for this is that the price, while affected by the dance floor and the extreme move, we never made those options in the money. And this is another thing. when you go that extreme, you have to extrapolate your position and say, this is as much as I think this can do before something happens, because you know that on the continuation here, you're going to hit the lower part of the channel regression with an upside divergence over here, and obviously the lower time frames are going to stop feeding continuity to that move. End of story. Now we're pulling back. Can this continue the upside? It's possible. This thing has momentum. It has momentum, and this thing is short on the drop. So it is possible. Let's see how much more up it can make it. How about VXX? VXX is really coming down over here. Magnificent hourly chart. We weren't even looking at this stuff. Again, the 5-minute turns, and that's the same analogy. One or two things can happen. One is, this is the beginning of the trend, and the other one, if we retest it, we're just going to make a great divergence. Right? Now here's Qs, also formed a 60-minute pattern. And this one is not as clear as SPY was. See, SPY over here had a divergence, whereas Qs an upside pressure pattern. Right? 5-minute created a nice retest, not quite all the way. The daily is a little short and starting to look like an upside divergence. We have support coming in here. It's looking interesting. How about Russell? Pattern also on the 60. Short on the drop. The weekly hasn't turned. This is the divergence that never happened, but this is the one or two things can happen on a technical bottoming like this. Either we retest or we just have a pullback. Pullback in this case. How about diamonds? Also divergence on the 60. Nice divergence over here. The one or two things over here is pullback on the trend established on this bottom. The long-term picture. Wow, this daily is an upside divergence already. This daily has an upside divergence. I do want to go see financials. Also divergence in here. The weekly is turning. Yeah, take a look at this thing. Wants to yank it. But can this thing go up? Shoot, I don't know. This looks like it's just going to pull back on trend. It's going to be interesting. That 15 definitely looks long. This looks like a continuation. This tells me that we can have a continuation in here. Remains to be seen. Take a look at American Airlines. Pull back, continuation, yields a pattern. How about GDX with this hourly chart? Let me call the 2 and 4. Nice pattern, wasn't it? Obviously, it had to play itself out, and that it did. This is the pattern. Ooh, you have 5 minutes. I was just not looking at this. Wow, this thing probably made a ton of cash. Over here, yeah, the 2650 puts. They probably made very good money. Quick look at Freeport McMoran. What's going on with Freeport? These guys are meandering over here. This thing is itching to return to the trend, which is now, can it? Will it? Quick glance at Apple. Haven't seen these guys in a while. This thing kind of sustained the price here. The long term looks bad for these guys. Last but not least, Fastenal. Take a look at this. Divergence kind of helped them sustain. We have this bottoming over here on the daily. This is about to turn nasty for them, let me tell you. So that's what I have for today. Quick glance at USO. Wow, take a look at oil starting to crash. Have I not been saying this thing is going to resume the trend? This is just a little pullback. Take a look at this. This was very, very strong. A daily chart. Wow. Look at this thing on this 3 time frame context. Here's the divergence. This is the driver. This pattern was unequivocal. Take a look at how the price just hangs out for a little bit over here, and then it gets slammed. The June 16th over here. Take a look at this. Insanity. And I'm looking at this thing thinking, okay, so this thing pulls back on trend, pulls back the hourly, and then it slams it back down. This would be an exit pattern for me. Even though the continuation here is still pretty strong, we have now an outside pressure pattern. This is it. It dropped $1. Very interesting pattern, isn't it? UNG popped back. But there's the technicals over here are broken because of this huge range. If I go like that, yeah, there's upside in here. Right? So enough of this bullshit. That's what I have for today. Let's see what happens tomorrow. Tomorrow's going to be Friday. Can't believe this week is gone. Just waiting for my next opportunity. Very good study on this. So tomorrow will be Friday, June the 17th. Until then.